Investors will receive an update on consumer sentiment in the week ahead, while the retail industry has generally been rattled by trade-related tariff concerns, as well as the move from in-store shopping to mobile swiping. The recent bankruptcy filing of fast fashion retailer Forever 21, for example, follows other iconic stores that have either gone under or have been undergoing restructuring this year, including Barneys, Diesel, and Gymboree. The convenience of mobile shopping, or m-commerce, has led to intensified but many failed efforts to lure consumers to actual stores. According to McKinsey Company, many apparel companies, for example, simply can't keep pace with digital competitors, with 6 out of 10 people now using at least one digital channel in their journey to buy clothing. This, McKinsey said, has major implications for physical stores. Meanwhile, empty retail spaces have also damaged the value of real estate investment trusts, such as Simon Property Group, which owns malls where store closures such as Forever 21, Sears, Kmart, and Toys R Us are growing more frequent. Against this backdrop, while the strength of the U.S. retail sector has remained resilient despite the rolling headlines of bankruptcy filings and restructurings, certain of the Trump administration's policies, underscored by trade-related tariffs on Chinese imports, may now be posing more adverse impacts on U.S. retailers, which in turn is likely to affect consumer sentiment, household spending, and ultimately overall economic growth. Market participants have warned that levies on imported Chinese apparel, footwear, consumer electronics, and toys will likely impact profitability at several U.S. firms, including Nike, Macy's, Walmart, and Best Buy. The darker outlook may be reflected in the University of Michigan's latest survey of consumer sentiment for September. Richard Curtin, University of Michigan's chief economist, noted that trade policies have had the greatest negative impact among consumers, with a near-record one-third referring to them as negative. While these and other policy concerns have so far been held in check by positive finances, Curtin added that fewer consumers now anticipate higher wages or lower rates of unemployment in the year ahead. Investors will likely be watching for the next release of UMichigan's survey due out on Friday, October 11th, for any developments that may signal further distress for economic growth, as consumer spending comprises more than 2/3 of domestic GDP. In the meantime, select the event calendar option in the IBKR Trader workstation for a full list of U.S. and global corporate events and earnings, dividend schedules, economic data, IPOs, and more. I'm Steven Levine with Interactive Brokers, asking you to enjoy the week ahead.